Users we expected to be strong. They were up 11 million in the quarter, up to 229 million, I think fifth quarter of gains. And that revenue number, Brent, I thought everybody was so worried about digital advertising. What happened?
Yeah, we thought it'd be a lot worse. So did the street, and even the guidance, what they're seeing into the second quarter is way better than anything we would expect and what the street was at. We think ultimately it comes down to engagement is super high. We have a household of 2 teenagers, and they're spending a lot of time on Snap right now. So we think engagement's up. Even going into this, we believe Snap was doing the right things around growing the average revenue per user. That was up nicely in the quarter as well. So all the metrics from users to revenue to operating cash flow all looked really good. And again, the expectations are for digital advertising to just fall off a cliff. We're not seeing that. And I think it's because we're all bound together by the internet, by these apps, and that's what's actually keeping their younger audience sane right now, is staying on these apps.
It's a big move, though, after hours, Brent. How does the valuation stack up? This sort of takes it almost flat for the year.
Yeah, the stock got hit below $10. We believe in a mid-teen price target, obviously, with these new results. I think there's more encouragement that this stock can trend to 20. So, yeah, clearly a nice bounce back. And we do not believe we're out of the woods. It's probably going to get a lot worse into the second and third quarter. So we still expect some of the darker days ahead for advertising. And you're seeing that in the updated numbers they gave, 44% growth in the first quarter, 15% growth so far through April. So we're seeing that decline hit. We still think there's a lot of value in this as a platform and like the story for long-term investors.
Mike, James Quincy, CEO of Coca-Cola, told me today that they're suspending their advertising campaigns as long as these economies remain shut down. And then they'll start to slowly deploy more money into that, like they're doing in China right now. But, I mean, Coca-Cola is a huge advertiser. The question is, have some of these stocks, the Snaps, Facebooks, Googles, already reflected that in the price?
Yeah, I think to a large degree you'd have to say yes. I think some of the first things to fall away, which I think a lot of investors were surprised were as important, were travel related and restaurant related, and that kind of going out transactional stuff. I think also that you're working against the fact that entire channel, digital advertising, is gaining market share. So it's not necessarily a one-for-one. When an advertising dollar doesn't get spent today, it all comes out of their book. So I don't know how the balance is going to shake out, but it makes sense if you're a big brand advertiser like Coke to just kind of wait and see where you can kind of preserve your influence for later in the year, perhaps.
Brent, very quick reaction on Uber and Lyft. You can pass if you need to, because I know we just threw that number at you that we reported. Were you surprised by that negative announcement in terms of, not announcement, report from a reporter that 85% down in bookings?
No surprise. I mean, next to travel, which was the first in, last one's out of this, rideshare is right there. No one wants to get in a car right now with someone else right now. We still think there's a great long-term value prop for what Lyft and Uber are doing, but it's by far the hardest hit group with travel. We think commerce is the most exciting with Amazon and Etsy and Chewy in that category. Those are the most exciting stories right now, given what's happening for the stay-at-home, work-from-home trend.